Sudhir Singh, CEO of Coforge, joins us now. Sudhir, good morning. Thank you for joining us. Now, you delivered a 16% growth in H1. Are you confident that you would be able to end the year of 13 to 16%, or are you on course to even beat that?
Well, we are absolutely confident. The guidance that we gave was at the beginning of the year, in a year where there's been significant macroeconomic volatility. At the beginning of the year, we gave a very assertive, a very aggressive guidance of 13 to 16% CC growth. At the midpoint of the year, as you noted, we are growing 16.2% in CC terms. I said this earlier in the investor call as well. The guidance that we gave at the beginning of the year is a guidance that we intend to deliver upon, and we believe that we will.
You know, for the longest time I've tracked IT, this has been the template. Large companies, they were getting large orders. They were, in a sense, more bulletproof, and they were able to withstand the cyclicality in the IT sector. But in last 1 year, the headlines are large cap IT is slowing down, mid cap IT is growing, and they are growing at a rate which is higher than the industry average. Is this largely because of a paradigm shift in the business model for mid-cap IT and for companies like Coforge? What is happening? I mean, why is that good mid-cap IT companies are coming out with phenomenal numbers when the big boys are contracting?
Well, our growth template has not really dovetailed fully with the mid-tiers or the mid-caps as you talked about. We have grown consistently for the last 6.5 years. Our CAGR over the last 6 years has been close to 18%. So irrespective of whether the cycle has been in favor of the large caps or the mid caps, we have continued to do well. I can tell you why we are doing well. We are doing well because we've always maintained growth is not just a function of talking about large deals won. It is also a function of the delivery execution, the ability to also retain what was secured in earlier quarters. The reason why every quarter we call out an order executable number, the reason why every quarter we call out deals won, and then in subsequent quarters we show revenue growth and not flat or declining numbers, is largely on the back of our ability both to continue to sign large deals as we have, but also to have an exceptionally high repeat client business. So that's been our template. The mid caps and the large cap story keeps oscillating every 2 or 3 years, but the Coforge story has stayed consistent for the last 6.5 years. We have delivered, come what may. We have delivered on our commitments, and in most cases have exceeded our commitments. This year is, we believe, going to be a repeat of that template, despite the very significant macroeconomic geopolitical uncertainties that came in, and despite the changes that have happened in other guidances. We have stayed firm from day one of the year, and will stay firm till day 365.
So let's focus a little bit more on how H2 is going to pan out. Will furloughs be higher than usual, you think, in Q3?
They will. We're already in Q3. Month 1 is about to get over. This year, the furloughs are going to be materially higher than they've been in the past. And that's largely a function of the macro stress that everyone's talked about, and that we also experience on an ongoing basis.
You said that you expect a demand recovery from Q4 FY24 onwards. You think it could spill over to Q1 of FY25?
Well, our growth, if you were to look at it over the years, has not been a function of the demand environment. In a year like this, in the first 2 quarters of the year, which have really been extremely demand stressed, we have still delivered a 16.2% CC growth. As we look at the future, we are confident, irrespective of which way the penny falls around demand, whether demand revives in Q4 or not, the number that we've guided to, we will deliver on. When we look at the demand environment, we believe it is going to continue to stay stressed for the rest of the fiscal year. Having said that, it is also equally important to note that even in tough macroeconomic in a tough macroeconomic context like it is these days, there are always green shoots available and areas to expand on. In this quarter itself, out of the 3 large deals that we've signed, 1 large deal is in banking, which everyone recognizes as a stress sector. And that is a large deal, not with an existing client. It's a new client that we've signed with a large deal. That's a large statement of work with a new client itself. So summarizing the answer, we expect the full fiscal year to see a tough macro environment We expect at the same time that we at Coforge will still deliver on the guidance that we've given. And we also believe that despite the tough times, and times will be tougher otherwise in the years to come, we will continue to deliver and execute as we have.
Would you tell us how large this large deal is? Would you?
All large deals, which we call out every year, we classify anything more than $20 million TCV, not extending beyond 5 years, as a large deal. This one was a 20 million plus TCV 3-year contract that we had. There were 3 contracts overall. This from banking was one of them. There were 2 that came from the travel vertical.
Is that you are doing differently because the macro environment has deteriorated seriously, but you are able to maintain the guidance. So is this largely because of a differentiated approach, different clients, you've added new differentiated products? What is different about Coforge?
I think at the core of it is the ability to execute, and the ability to execute that's been proven over the last 6.5 years. Our growth story is not a 1-year or a 2-year story. Our growth story is not a story where we're talking about doing new things which will land us to growth. We've always said what we've done in the past, the learnings from the past are what we need to extend into the future. What I believe we do well is that, like a lot of our peers, we also sign large deals, possibly with a greater velocity and an increasing median deal size. But equally importantly, and this is something that one needs to watch out for, our ability to retain the book of business that was with us from earlier quarters is exceptionally high. Our repeat client business, our repeat business from existing clients is 93%. That possibly is one of the highest levels for a firm our size. So what I suspect are doing differently is 2 things. One, our ability to sign large deals, and to sign large deals at a gradually increasing median size level is significantly high and getting better. Second, equally importantly, our ability to make sure that the existing book of business does not see a drip going away is also exceptionally high. The 2 metrics that I've always differentiated Coforge is 1, the repeat business from existing clients, and 2, employee retention. For the last 6 years, Coforge has had consistently the lowest employee attrition of any IT services firm on the planet. For the most part, there might be a few exceptions. These 2 things on the execution template are what have set us apart, and I suspect are likely to continue to set us apart from the commentary that you hear and the performance that you see.
Well, Sudhir, good luck, and incredible the kind of resilience Coforge has reported. Let's